Imagine running a business. Sales are coming in, you're selling goods for more than they cost you, your staff is happy, customers seem happy, but suddenly you run out of cash. Now, how does that happen? Welcome to Valkyrie Simple Finance, where we believe in understanding before investing. Today, we're going to explain how we measure things in business finance, and that is called accounting. It's important to remember that if we can't measure something, we can't manage it. Essentially, accounting is the system businesses use to understand where money comes from and goes to, and whether the business is actually making more than it costs to conduct that business. Once you understand the basics, business becomes much easier to understand. At its core, accounting is simply the process of tracking money in a business. It records what the business owns, what it owes, what it earns, and what it spends. Think of accounting as the financial language of business. Just like pilots rely on instruments to fly safely, business owners and managers rely on accounting to make their decisions. Without accounting, businesses operate blind. Good accounting helps answer questions like, are we making money? Can we pay our bills? Are our sales growing? Is the business healthy? Can we afford to hire staff? Or should we borrow money? Accounting enables those running the businesses to turn raw numbers into decisions. Almost every business uses three core financial statements. The income statement, sometimes called the profit and loss statement, the balance sheet, and the cash flow statement. Together, these tell the complete financial story of a business. It is worth remembering, though, that whilst all these statements are historic, they reflect what has already happened. They provide the vital information needed to make decisions for the future. The income statement, sometimes called the profit and loss statement, shows whether a business made money over a period of time. It starts with sales revenue, the income, and subtracts expenses like rent, salaries, inventory, utilities, marketing, and taxes. And what remains is profit. The balance sheet shows the financial position of a business at a specific moment in time. It shows what the business owns, called assets, what it owes to other people, called liabilities, and what belongs to the owner or owners, called equity. The balance sheet always follows one very simple formula. The assets equal liabilities plus equity. What the business owns always equals the amount that it has borrowed plus the amount that the owner has invested in the business. It's called a balance sheet because it balances. Now, here's where many businesses get into trouble. A business can show a profit, but still run out of cash. In fact, more new businesses fail because of cash flow difficulties than fail because they're not profitable. That's why the cash flow statement matters. It tracks actual cash moving in and out of the business. Cash flow is what keeps businesses alive day to day. Let's look at a simple, real-world example. A small business sells $50,000 worth of product. The product cost originally $20,000. That sounds great. But customers haven't yet paid. In fact, they don't pay for 3 months. Meanwhile, the business still has to pay suppliers, staff, rent. So on paper, the business looks profitable. But in reality, until it receives the money from its customers, it may not have enough cash to survive. Many new business owners make the same accounting mistakes. They focus only on sales. They ignore expenses. They mix up personal and business money, or fail to track cash flow. Understanding and applying accounting basics helps avoid these problems before they become dangerous. Accounting is not just for accountants. It's one of the most important business skills you can learn. Once you understand the basics, you can make better decisions, avoid costly mistakes, and build a stronger business. Today, we have introduced the 3 basic accounting statements used by owners and managers to help manage their business. In the next episode, we will break down the balance sheet in a simple way and explain assets, liabilities, and equity step by step. Thank you for watching. If you like and want to learn more, please subscribe, like, and comment. Remember, at Valkyrie Simple Finance, we help you understand before you invest.